Hey, happy Sunday to everyone. Sorry for the late video here. I usually try to get these out Saturday morning while I drink my coffee, and so you have a whole weekend to stew over them. Well, I had some family things, and family comes first. So I'm here. I am. We got 30 minutes to Globex open, so hopefully this can still be helpful. And yeah, we are talking about a whole week, not just a Sunday night. So anyway, we'll talk about what we talked about last week and how things played out from there, and then what to look at this week. Should be interesting with the Fed on Wednesday and quad witching on Friday. And I'll get to why that's a silly term and it's over dramatized, but whatever. Anyway, first, some disclosures. This is not meant to be investment advice. I'm a day trader. I'm frequently wrong. I'm just trying to get my process out there, so maybe it can be helpful to you in some way, shape, or form. Um, Trade your own due diligence, your own opinions and convictions, and exercise caution at all times. Okay, so let's go ahead and get started. I like to start with the next SPX daily chart, and this is what we saw. This is where we were last Friday when we talked. Um, you had this ugly candle below the 60-day moving average closing on the previous Friday. But a lot of optimism because of this big tail, the buying we saw going into the end of the session on Friday afternoon. And I went over a few other reasons I was pretty optimistic about this week at that time. And they played out. I talked about this 46.50 level being huge, sort of the dividing line. There you go, between bulls and bears, and whether this was going to continue down. If we'd been rejected here, I would have had a different tone this week. But anyway, we closed at an all-time high, meaning not an all-time high intraday, but all-time high close on the SPX. So congratulations to the bulls. I sat out on Friday because I'd made my money for the week, and I didn't want to ruin a good week by making a sloppy trade on Friday. I do that frequently. So I missed out. So I'm happy for anyone who made money in my absence on Friday. So good for you. But as I said, we have an interesting week ahead of us with some things that could throw a wrench into this beautiful rally. I'll go ahead and get into those in a sec. Something interesting happened as this put level has now moved up to the 4,700 level. I can move that now. Oh, no, I can't. Well, anyway, I'll get into the options market in a sec. We had the VIX close are about in the 18s, which means ranges should tighten up this week unless we get another volatility event. We do have one on Wednesday that could you could see that Tuesday sort of capitulation or whatever, similar to what we saw here. We had that big inflation number come out Friday morning, and so that's what this was, this little pullback in here. This was a time to sort of exercise caution, actually, looking back. Sometimes you see rallies sort of fail. Everything's looking great here, but then you see this pullback. But at the end of the day, all the hedging that happened for that inflation report, which is really what drove the market down on Thursday, is what made the market go up Friday as those hedges were unleashed, or the delta on them diminished to just about nothing. So good times for bulls this week. Good job, everyone. Now let's look at the options market. What I found interesting about what happened was, remember I said this 4,000 level is actually the biggest put level as far as open interest goes. It remains as such, but again, it's so far away. It's something you just throw in the back of your mind. What was actually interesting about this week is that this 4,400 level, which was king, sort of diminished a little bit as profit was taken on puts, maybe. God knows what else could have happened. Nobody really knows. But anyway, 4,500 level remains strong. That's understandable. As we bounced off that level, probably a lot of people went in and sold puts. Great. That's support. But what caught my eye is that this 4,700 level has picked up and become the biggest put level right now, other than the 4,000. So what that means, this remains the biggest call level as well. So that makes 4,700 a huge, huge level, as if it wasn't already. As if you know anything about delta hedging, if we were to turn down for whatever reason early in the week, the delta on these puts becomes a problem. Also, the decreasing delta on these calls becomes a big problem, as when dealers or counterparties to these trades would have to then hedge those positions by selling shares of the underlying. Meanwhile, the delta on these would be decreasing, meaning they could unleash the hedges on those ends to where you have a double dose of selling, which would not be good for anyone who's long. So something to keep your eye on. If we break below 4,700 firmly, maybe regardless, you should always be exercising caution, and you know where to have your stops after what we just went over. 4650 remains the main support, although now we're looking at this as being huge, crucial. We do not want to see it slip back heavily below 4,700 for that reason. So that's kind of what I'm looking at. I want to see how the market acts at that level. Let's go over here. One other thing I wanted to talk about really quickly. My analysis on this is not complete, so I don't want to talk too much about it until I really have a firm. But what I'd like to point out is when we get into these options expirations, you might notice that with these candles is they tend to fill at about where they opened, or near the highs if it's a green candle, and near the lows of it if it's a red one. There's a tail there, I guess, a little tail there. But so I always watch this. This is just aggregating between. You can see this one starts November 20th, ends this Friday. So it's just options expiration to options expiration. So essentially, it's just a monthly candle with different dates. But I find that pretty interesting. It's something I watched in the last 2 weeks of going into an options expiration, and it kind of turned out that way here. We set a high early on during this candle, and so it's sort of suctioned back up to that high. It's doing what it tends to do, so that's interesting as well. I'll have more for that in a later video, I suppose, when my analysis is more complete and has a little bit more behind it than just me blathering. Now let's go look at ES intraday real quick. Point out where this held is really strong support. That's that 4650 level. Remember, there's a difference between ES and SPX, but regardless, when you're talking about those zones, especially with the VIX being somewhat elevated as it was most of the week, you really need to think about it in terms of it's not 4650 on the nose. It's 10 points to either side, and the higher the VIX is, the wider that range needs to be. It's really, you're just looking at that area to see what the market does when it hits them. So as you can see, that remained really hefty support once it broke above it, so that's healthy. You saw that we gapped up back there on SPX. There was a little continuation gap down there around 4610. Those take a long time to fill, as we saw before. It took 2 months to fill those continuation gaps from the last big rally in October off of the lows from September. So don't get your hopes up if you're trading gaps on those filling anytime soon on that big gap. Now, as I said, so this is your support, obviously, as I talked about. So we know that we want the market above there, and now we want it above 4,700. So that's what we're looking at this week, period. Now let's go flip over and look at these guys. I always like to look at Max Pain. It just tells you what I showed you before, is that 4,700 is your big call. 4,700 is also your bigger put. Max Pain has increased week over week. I believe it was 4,500, increased by 5 points. Max Pain is where they get max premium. So something to keep in mind if we turn back down. We obviously know, I don't need to talk about what big support level that is. So that's that. And what else do I like to always go over is your guys over at Squeeze Metrics. So let's clear this. Start with the dark pool index. We continued to see buying or heavy activity in the dark pools market while liquidity was very low. So the right people were buying while there was low liquidity. That's why you get these huge freaking rallies like we had last week. Face melter, really. So that played out exactly as they kind of showed that it would. And gamma exposure has come back up. So that means that markets will become more liquid based on other factors as well, with the VIX decreasing. So you're going to see probably tighter ranges this week. Other than, you might see some big hedging on Tuesday going into the Fed, Tuesday and Wednesday going into the Fed, and Friday will always be a weird one. Options expirations always are. Reminder: SPX options close in the AM. Everything else SPY, ES on PM that day. So just keep your wits about you, manage your risk, and I hope you have a great week and good luck. Thanks for joining me. We'll see you next week.